Wednesday, I talked about why you want to use the ATR for targeting. Today, let's talk about using it for stop losses and following stops. I also want to talk about reward to risk ratio, so hang around. Hi, this is Tim from TradingStrategyGuides.com. I think my voice is getting a little better, but it's still just a bit raspy. Thanks for your patience on that one. I had a couple of you respond to Wednesday's challenge. I know you guys get it, and you're on your way to big things. Congratulations to you guys. Today I'm going to talk about using the ATR for setting a reasonable stop loss. I'm also going to cover the issue of reward to risk ratios. After that, we're going to take a look at the daily setup of another old friend, Dish Network, the satellite television provider. But first, I want to show you about our weekly US dollar Mexican peso setup, which could trigger today, and then later on the trading maxim for today. It's Friday, so let's get on with it. Remember to click the subscribe button and hit that bell so you don't miss any of these great trading techniques. All right, let's look at charts. You may remember back at the beginning of November I showed you this triangle on the weekly US dollar Mexican peso Forex pair. Well, here you go. It's the end of the week and it's looking like we may get our close below the triangle right here. I'll look at it again just ahead of the 5 p.m. US Eastern Time close today, and if the price is still below the triangle, I'll sell it. Don't miss this. I think it could be pretty big. You may remember from last week's videos that I've already gotten profit on the Kiwi Swiss, and now I'm just watching to see what result we would have gotten from using the parabolic SAR to follow stops. Doing that, we would move our stop to right here, roughly 64.29, locking in 40 pips on this. If it keeps pushing up like this, we'll be in a position to have made more on this one with the PSAR stop following than we actually made on this trade. Okay, I'll show you the Dish Network setup shortly. First, I'm going to show you how I use the ATR for setting up the initial stop loss, and then I'm going to talk about reward to risk ratio. Today I'm going to show you how I love the average true range or ATR for setting stops. And again, it's because I like the fact that it auto adjusts your stop loss based on the market and the time frame. I hate having to remember specific stop loss levels for all the different markets I trade. I'm going to explain this in gory detail. Again, I apologize to all you math nerds out there for which all of this will be obvious. But this is for the folks that struggle with math. So you number people, plug your ears and sing loudly to yourselves for a few minutes. You've heard me say it in many a video. The ATR is simply the average length of the last 14 candles. I told you on Wednesday that I use a 14-period moving average of the ATR. So in all the cases where the market closes over the weekend, which is most of them, we're talking about the last 3 weeks of trading. The ATR measures the length of each of the last 14 candles, adds them all together, and divides that number by 14. So the result is a moving average that adjusts for the volatility of the last 3 weeks. When volatility declines, and we call that market compression, that's just a fancy way of saying that the price doesn't move around as much. When volatility declines, a fixed size target is far less likely to be hit. When volatility increases, called market expansion, and the price moves around more, your fixed stop is more likely to be hit. Neither of these situations is ideal. For example, what if you want to try out a strategy that you like on the daily chart and you want to try it on the 4-hour chart or the hourly chart? How do you adjust your stop loss to handle the shorter time frame? Well, Wednesday I showed you charts of the pound Australian dollar with a daily ATR of 138 pips and 4-hour ATR of 48 pips. Then I showed you the Euro USD with a daily ATR of 41 and a 4-hour ATR of 14 pips. So as you can see, the ATR will adjust automatically for your market and for your time frame. Not only does it lend itself to targeting your trade, but also setting your stop losses as well. If you've followed this channel for more than a minute or so, you'll know that almost invariably I use 1 times the ATR for my first target and 1.5 times the ATR for my stop loss. I had a question in one of last week's videos about my reward-risk ratio being less than 1. In other words, my stop loss is larger than my first target. It's not the first time I've been asked this question, and I'm sure it won't be the last time. And you guys know that I'm not afraid to be a little controversial, so don't hesitate to agree or disagree with me in the comments below. Here's the controversy. Reward to risk ratio alone doesn't tell you the whole story about your trade. It assumes way too much about your strategy. To make matters even worse, if my trades hit the stop loss, the whole position is off the board for a full 2%. If my target is hit, only half my position is closed for a profit of about 2/3%, with the rest set to break even. So a trade that hits the target and drops will close with only 0.67% profit. I would have to close the whole trade at the target for the reduced reward to risk ratio to actually be a thing. So if you don't look at the whole picture, then I can understand your concern with the reward to risk of 1 to 1.5. But there are other factors at work here. First of all, a straight reward to risk ratio of 1 to 1.5 can be extremely profitable if your win rate is higher than 60%. So what is the secret to my strategies? Well, I rarely hit a full stop on my losing trades. So functionally, I'm using a much larger reward to risk ratio than my initial numbers reveal. I know you guys have seen my trade spreadsheet before. The red lines are the ones that hit the full stop, and that's only happened 9 times out of 86 trades since I started doing the videos last April, so roughly 10% of the time. Here's a MyFXbook page of my Control Forex account. This is a demo account that I use to control several other accounts. I don't keep all my money at one broker for safety reasons, so I control them all with trade copiers. This is a daily strategy that I spend about 15 minutes a day working. I use the same trade management on this as you see in my videos. It's up 36% since late April. You can see we had a really nice windfall in August. This is where a trade management strategy like this shines. Allowing your winners to run will set you up for days like that. Obviously, it doesn't happen every month, and sometimes we get a bit of a drawdown like we did right here and right in here. But here are the stats. You can see right here that my win ratio is actually below 50%, 47% actually. But take a look at the average win, $75, and the average loss, $43.50. That's the functional result of my trade management rules. I close most trades long before they actually hit the 1.5 ATR mark. I hope you guys understand what I'm saying. The initial reward to risk ratio doesn't tell the whole story, and sometimes trying to get 2 to 1 or 3 to 1 reward to risk can kill your overall strategy. So definitely experiment and test everything you do. You're not tired of hearing that one yet, are you? Okay, let's take a look at the Dish Network setup. Dish Network has been in this huge triangle on the daily chart since way back here in September. It's a well-defined triangle that's about 1/2 complete right here. Typically these won't break until they reach 2/3 or 3/4 of their completion. We've got a little bit of decline in the volume and the volatility here. So I'm not thinking it's quite ready to break out, but watch it anyway. Here's the trade plan. We'll buy a daily candle close above this triangle or sell a daily candle close below the triangle. To enter a full size position on the breaking candle, you want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach at least 75% of the average, you can open a half size position to reduce risk. You can calculate that percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, don't enter the trade. As I mentioned, the stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say this is breaking to the downside, and you get the candle close right here, and that's your entry point. And you look down here on that very candle to get the ATR, you multiply it by 1.5, and you measure that distance above your entry for your stop loss, and then you measure 1 ATR below your entry for your first target. Just the opposite, of course, if it breaks to the upside. Now here's the key of what I was talking about with the reward to risk ratio. If after entering the trade we get a candle close back inside the triangle, we will take the loss right then and not wait for it to hit the stop loss. We intend for this to break out explosively and hit our target quickly. If it doesn't, we want to close this trade down without it hitting the full stop. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. And that is what will allow us to ride a long, explosive move out of this triangle. Now typically I do this using 2 positions. The first position has a stop loss and a take profit on it. That position will close automatically when the first target is hit. The second position will have only a stop loss associated with it, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on Dish Network. My intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's also my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 3. Never bet the farm. You should never allow any one trade to make you or break you. You hear me say this just about every video during the trade setup. For those of you who are not natural English speakers, never bet the farm means you should never wager anything that will change your lifestyle if you were to lose. For example, you shouldn't bet your house or car, or even just your house payment or your car payment. We call that scared money. You will never manage it properly because you will be afraid to lose it the whole time you've got it on the line. And no trade is ever 100% sure. Anyone who tells you that is lying to you. Manage your risk properly and you can be a successful trader. And that means keeping your risk small. As I'm sure you've heard me say, I risk about 2% on each trade. That's 1% on each of the 2 positions that I put in place when I open a trade. I say about 2% because sometimes you have to fudge that by a small amount to have even lot sizes or whatever. Remember, no single trade should make or break you. With that having been said, I've had single trades that made my week and even my month, but not because I risked a lot on it, but because I rode the trend for a long time. That's the way I like to do it. Remember our daily Dish Network trade plan here. We're going to buy a daily candle close above the triangle or sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Sign up for my free Trading Picks email list so you can be sure that you won't miss any of these great trading picks. I send out about 3 or 4 trading picks a week from all different markets and you'll get to see them first. And the best thing about it is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or 2 on each one and maybe some extra Q&A or training. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video like today, or both. And remember, the only stupid question is the unasked one. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next week.